Let me bring on Brandt from EPFR Global to talk about what he's making of the global construct right now. Cameron, too many moving parts at play, if you will, right now. Tell us, what do you think the markets are going to focus on this week?
I think as long as something spectacular doesn't happen between Israel and Iran, they'll get back to focusing on what they're much more comfortable with, which is the earnings calendar, the Bank of Japan decision towards the end of the week, and a few data points coming out of China, especially the industrial profits number towards the end of the week.
Okay. What, to your mind, will be the importance of the GDP data? Do you think that could act as a swing factor in deciding which the emerging market flows would move?
To be honest, no. I think emerging markets are being seen much at the moment on a case-by-case basis. We're not really seeing flows pursue them as a broad asset class. The global emerging markets equity funds have really struggled, whereas good news for you, dedicated India funds are busy extending their longest weekly inflow streak since we started tracking them back in the late 1990s.
While a lot of geopolitical concerns may have abated to a certain extent, how is it that you are looking at, the economic data coupled with the last week's news of Israel's strike on Iran and all of that really weighing on different asset classes, bond yields in particular?
Certainly seeing a modest uptick in repricing risk, especially in the energy space. I think geopolitical risk and energy prices have joined U.S. interest rates on the higher for longer category. But certainly, what I've observed over the years is a desire to return to the glass half full as soon as possible. So we'll take a fairly abrupt geopolitical event or a really odd US GDP number, I think, for markets to really sort of move aggressively away from our current positioning.
Okay, thank you so much, Cameron, for sharing with us your thoughts on all that's happening across the globe.